Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Airbnb reported earnings over the past week, and there was really a lot to like from results, despite the fact that the market didn't have much of a reaction. Now, shares were up about 4% last week, but keep in context that that gain actually came on Friday, and that really had nothing to do with earnings, had everything to do with the reaction from both the Federal Reserve early in the week and then the jobs report that came out on Friday. So a lot more market movement that impacted Airbnb, which is maybe a more volatile stock than earnings movement. But if we think about this company long term, I really like where Airbnb is headed. Its cash flow is phenomenal. Its network effects are growing, and the trends that the market may be seeing as negatives, I think, are actually positives for this kind of business long term. So that's what I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for the top 10 stocks to buy right now. And I want to first just start with a high level look at the numbers. These are some of the key financial metrics that Airbnb points out every quarter. $3.4 billion in revenue, 18% growth year over year, 14% excluding currency changes, net income, $4.4 billion. That includes a one-time tax benefit, so that's a really big number and isn't really indicative of how profitable the business is. So this number, adjusted net income, is probably a little bit more accurate, $1.6 billion. But keep in mind that that margin is just phenomenal. Adjusted net income margin, 47%. What you want to see from one of these digital network effect companies is them getting a lot of operating leverage. If you grow revenue 5%, you should see net income grow 10% or 20%. That's exactly what we're seeing in these numbers, is that they have phenomenal operating leverage in the business. Adjusted EBITDA, $1.8 billion, up 26%. So there again, you're seeing that operating leverage. And then free cash flow, $1.3 billion in the quarter and $4.2 billion in the trailing 12 months. Trailing 12-month cash flow margin, 44%. So just a phenomenal monetization of this business. A couple of other metrics that really matter is gross booking volume. So this is how many customers are actually booking. It's up 17%. And another metric that is similar is going to be nights and experiences booked, up 14%. So you've seen a little bit of price increase there. But management did go out of their way to point out that the price increases on Airbnb were actually slower to grow than they were for competing hotels, which is actually a positive for the affordability of Airbnb as a platform. I've talked about this being a network effect company a couple of times. And what that means when you have a network is you need to have supply to have demand. But once supply starts to increase, then demand increases. And then there's this virtuous cycle. Some people call it a flywheel that goes into effect once those two things start coming together. And so this is a number that I thought was really important from the earnings call. Active listings up 19%. Think about that compared to a hotel company. A hotel would have to build 19% more hotel rooms to be able to have active listings grow 19%. But Airbnb, as a digital company, as a network company, doesn't need to do that. They just have more listings on their platform. So I think that is a really positive trend long term. Like I said, helping keep the prices for customers low. But we're still having a lot of money go into hosts' pockets, $19 billion in the third quarter. I just wanted to highlight a couple more things in relation to the experience, because again, we can analyze the financials all we want with Airbnb. If the experience is deteriorating, if people aren't using it as much, then it's not going to be a good product or a good investment. But management seems to be doing a really good job of listening to what customers want. Filters is something that is now built into the app. Search has been improved. If you have used their app recently, you have seen some improvements in the experience of the app. Pricing is more transparent than it used to be. And then on the back end, some of the host tools like price comparisons have been a really big addition for Airbnb as a platform. So those things are improving and are really helping the financial performance of the business. The other thing that's always worth pointing out with Airbnb is the amount of cash that they have on the balance sheet and then the interest that comes with that cash. As of the end of the third quarter of 2023, there's about $18.5 billion in cash, customer deposits, and then what they call unearned fees. And this is all money that Airbnb gets to invest in things like treasuries, which are now yielding a little over 5%. So they're able to keep that interest. In the most recent quarter, interest income alone was $192 million. So this is a really sizable piece of the cash flow that's coming from the business. It's just that cash that's sitting there on the balance sheet. Now, one thing they can do with that cash, besides just put it in investments that will get some yield, is buy back stock. Airbnb has started to do that in relatively on a sizable basis based on the numbers, but they definitely could pick this up. They bought back $1.5 billion worth of stock so far this year and recently increased their buyback authorization. So I think that's another way that they could add value to shareholders, to just continue putting that money back into buying back shares of the stock. And then I just wanted to show this chart to put some of the growth into context for Airbnb. If you're going to buy this company, you want to see cash flow growing year after year. Now, this includes the pandemic, and that's why you had the negative cash flow during the pandemic. But what you see even over the past year is that free cash flow continues to improve quarter after quarter. As I talked about earlier, that's because that network effect between buyers and sellers, where Airbnb is sitting in the middle, that continues to get stronger. And as there's more supply that comes on the market, there's going to be more customers that choose Airbnb. Yes, there's competition coming into the market. And I think that is something that's notable. It will force Airbnb to continue to be an innovative company, to improve their app experience, to maybe even improve the percentage of revenue that's going to homeowners or the people renting out their rooms. So that'll be something to watch in the future. I think that's something where Airbnb could actually lower their take rate a little bit to try to maintain their market share and keep that competition at bay. But right now, it seems like everything is going in Airbnb's direction. Free cash flow continues to go up and to the right. Management is using that money to either generate cash with interest or by buying back stock. So I really like the trends for Airbnb. A decade from now, I see this being a much bigger, more valuable company. They have talked about adding new products. Actually, I have an event next week where they're going to announce some of their new products for the winter season. So I will probably be back next week covering that on this channel if you want to follow along. But as for earnings, as a shareholder, I was very happy with what Airbnb reported. Love seeing that cash flow growing. And I love seeing management listening to both customers and suppliers and improving the experience on both sides of the equation, because I think that makes that network effect that much stronger. But what did you see from Airbnb this quarter? Any red flags? I kind of glossed over the news from New York, but that is one city. I don't think that's something that's going to be spreading around the world. And now this is a global company. So that's not something that I'm really focused on. Airbnb losing business, because I think there are downsides for cities that decide not to allow a company like Airbnb to operate. But love to hear your thoughts about what's going on with Airbnb right now and the numbers for the quarter. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.